7 Things you should know about auto and car insurance. Many car owners are confused by common misconceptions and unfamiliar terms. Here is how to find the best coverage and the best price for your vehicle. Whether you shop online or use an agent, buying an auto insurance policy is complicated. While the internet makes it simple to compare policies and rates, it is still easy to get confused by all the unfamiliar terms and jargon insurance companies use. The decision-making process is also clouded by long-standing misconceptions or myths about how auto insurance works. For example, a lot of people mistakenly believe red cars cost more to insure. That is not the case. What drives up rates are things like speeding and accidents, said Loretta Werters, Vice President of Media Relations at the Insurance Information Institute. If you have a red car and you speed and get a ticket, or have an accident, those are reasons for a rate increase, not because you drive a red car. Insurance companies consider a lot of factors about the vehicle when setting their premiums, including the make and model, age, body type, engine size, the cost to repair and the likelihood of being stolen, but not the color. Here are 7 things you should know about auto insurance. 1. How prices are determined. Each insurance company has its own formula for calculating premium prices, but they all tend to use the same basic factors. These include obvious ones, such as the make and model of the car, how you use the vehicle and your driving record. Other factors that go into the mix include your age, gender and marital status. Statistics show young drivers with less experience behind the wheel and male drivers are more likely to have an accident. Married drivers, on the other hand, are less likely to file an accident claim. Where you live. Someone who lives in an urban area with a high crime rate is most likely considered a bigger risk than a policyholder in a rural area with less traffic and fewer car thefts and break-ins. Your credit score. In many states, insurance companies can consider credit scores when calculating premiums. The industry says its data shows that drivers with better credit have fewer accidents. Consumer advocates believe this unfairly penalizes lower-income car owners and they want the practice outlawed. 2. The difference between collision and comprehensive coverage. When it comes to auto insurance, this is probably the biggest area of confusion. Many people, it seems, do not understand what they are buying. A recent survey by Insurance Quotes found that 68% of Americans incorrectly believe the comprehensive part of their policy covers damage to their car from a collision. According to the Insurance Information Institute, comprehensive provides protection against theft and damage caused by an incident other than a collision, such as fire, flood, vandalism, hail, falling rocks or trees, or hitting a deer. Collision reimburses you for damage to your car that occurs as a result of a collision with another vehicle, or other object such as a tree or a guardrail when you are at fault. It also covers damage from potholes or from rolling your car. Both comprehensive and collision coverage are optional auto insurance that protects your car. Liability insurance is legally required because it covers the costs associated with injuries, death, or damage caused to another vehicle or property that you or another driver causes while driving your car. 3. A more expensive vehicle does not always cost more to insure. That is why it is important to figure out what your insurance will cost for the various models you are considering when you start shopping for a new vehicle. An expensive SUV might have better claim rates for accidents or thefts than a lower-priced car, so the premiums end up costing less, said Penny Gusner, consumer analyst for Insurance.com. 4. There are ways to pay less for auto insurance. There may be several ways to lower your insurance bill. In some cases, that means reducing coverage. For example, you might want to drop comprehensive coverage on an old vehicle. Raising the deductibles, which you will pay before insurance kicks in, is another money-saving move, if you can afford to cover the potentially higher out-of-pocket costs. According to the Insurance Information Institute, increasing your deductible from $200 to $500 could reduce your collision and comprehensive coverage cost by 15 to 30%. Going to a $1,000 deductible can save you 40% or more. Insurance companies offer discounts for low mileage, multiple cars, safe drivers, no moving violations in 3 years, and students with good grades, just to name a few. You may also be able to get a better price per bundling auto and homeowners coverage with the same company. Five. Personal auto insurance does not cover using your vehicle for business. Most policies exclude driving a personal vehicle for business purposes. Many companies will cancel your policy if they discover you are doing this. You'll need to be aware that if they do any kind of side gig, pizza delivery, messenger or rideshare driver, they need to make sure they are covered, because if you are in an accident, you might be on the hook for everything, Gusner said. Talk to your insurance company about getting endorsement to your policy for that business driving. Rideshare drivers such as Lyft and Uber have good coverage from the rideshare company when they have a customer in the vehicle. It is when they are driving around waiting for the next rider that they are at risk. The added coverage provided by a business use endorsement is reasonable, typically $10 to $20 a month, according to a survey by NerdWallet. 6. Let someone drive your car, and your insurance will pay if they have an accident. The general rule is, auto insurance follows the car, not the driver. If you loan your car to someone else, you are essentially loaning them your car as well as your insurance, in most cases, said Eric Madia, Vice President of Product Design at Assurance. So unless it is an emergency, or you have been drinking, you need to think about the insurance implications of letting someone else get behind the wheel of your vehicle. Seven. Let your car insurance lapse and it could drive up the price when you need it again. It is tempting to cancel your car insurance when you do not plan to drive for an extended period. It is also easy to forget to pay a bill. Whatever the reason, if you let your coverage lapse, your insurance rates will be higher should you need coverage again down the road. As Assurance notes in a blog post, our insurance companies consider the uncovered to be higher risk than those who diligently keep their policies in force. And even a one-day lapse in coverage can lead to higher rates. If you will not be driving the car for a while for some reason, contact the insurance company and see what options you have. How to get the best price on auto insurance. Buying insurance is like any other purchase. If you want the best price, you need to comparison shop. Every auto insurance company has a different underwriting policy which results in different prices. You can compare policies side by side at sites such as Insurance Quotes, Assurance and Insurance.com. Insurance rates vary, sometimes by hundreds of dollars a year, with different insurers, said worders at the Insurance Information Institute, who want to make sure you have an auto insurance company that has a good rating, offers good rates, but also provides good service. For those who already have auto insurance, Consumer Reports suggests doing a rate check every 2 or 3 years. While looking beyond just a couple of insurers, you will have a better shot at savings, the editors write. You should also shop the market whenever your personal circumstances change, such as getting married, divorced or moving to a different house or apartment.